Prozis Ventures, one of the earliest investors in BYJU's, last year wrote off, not wrote down, wrote off its holding in BYJU's of almost $530 million. Remember, just a couple of years ago in 2022, when BYJU's was valued at $22 billion, the investment of Prozis was valued at $2 billion. This private equity firm based out of Netherlands has incurred one of the largest losses in the private equity space in India because of this large single investment made in BYJU's. So let's analyze this. What happens when a private equity investor makes an investment in unlisted stocks? So when they make investments in unlisted stocks, typically it will be of a very large value. Obviously, because the investor is looking towards helping the company grow its business. So when they made the investment in 2018 or 2016, I'm sorry, they had invested almost $530 million into BYJU's. Come Corona phase, come the COVID-19 experience, come the lockdown, and learning began, to be all online. The company did very well. So obviously, its revenues grew, its profits grew, and so did the value of the investors holding in the company. Literally in 2022, the value of the investment of Prozis Ventures in BYJU's was at $2 billion. That's a lot of money, right? To see a little quadrupling in less than 4 years. And this is exactly what happened. That the venture capital, the private equity investor made so much of money in that particular unlisted stock, they decided to continue to hold on to it. Unfortunately for Prozis, they did not expect the decline of BYJU's to be so fast and so rapid. And so when the decline started, Prozis would have done something called as a writing down of the investment. So from one round of equity funding to the next round of private equity funding, valuations change. In the case of BYJU's, the valuations collapsed. And the company, the investor, did not do that writing down. So when they write down, they reduce the value of the investment. Writing down versus writing off. Writing down means you're reducing the value of the investment. Writing off means you're completely writing off the investment. In 2024 June, Prozis realized that nothing much can come out of this investment it has made in BYJU's, and therefore it completely wrote off its investment in BYJU's. Sometimes investors make money, sometimes they lose money, is what you might be saying. So what's the big deal? The big deal is that it's very rare that investors write off completely such a large amount of money, especially since the investee company also has become quite large. It had already gone through multiple rounds of funding, and therefore it's rare to see that such a large write-off happens so quickly. The only other example I can think of in the US market was Theranos, a company which was almost lost all its investment value because of the fact that it lied to its board of directors, and the investors didn't do a proper due diligence of the testing process of their miracle diagnostic techniques. But over here, when there is not much left on the table, when the investing company itself is not giving out good signals, then the investor decides to write off the investment completely. Of course, the investors would be livid. The limited partners into the fund would be very livid. They would be very angry because they have made a lot of money. They have made a lot of fund investments into the company, into the fund, expecting that the fund would take care of such kind of mistakes, such kind of errors. But unfortunately, that didn't take place, and thus the company, by just shutting down, caused a lot of heartbleed not just to its employees and to the management, but also to the investors who had poured in millions of dollars, literally billions of at $1 billion valuations, finding out that now they're holding nothing on their hands. There are many lessons to learn from such cases, especially from the private equity investor's point of view. Is when the slide is fast, it is normally very, very dramatic, and it's important to stop that slide or at least recognize that slide by writing down the asset before taking a complete knock. Many banks in India who give loans to corporates follow this staged kind of writing down. So a good asset becomes a substandard asset, then it becomes a bad asset, and then it becomes a loss asset. So the impact of writing off is not felt immediately, it is felt over a phased period of time. Okay, and thus banks, when they have to completely write off the asset, they face the loss, they recognize the loss over a staggered period of time, because they go through this classification of classifying assets into loss-making assets, into substandard assets, bad assets, and then the loss-making assets. Many new rules are now going to be coming up about how uh, investors, especially in unlisted stocks and unlisted bonds, can value their investments, because they would be in a position to then give a more fair and transparent view, as alternative investment funds, AIFs, now have become extremely popular with a larger set of investors than what it was earlier.